Hello, everybody. I'm Mauricio Carrillo. This is FXStreet. Welcome to this Federal Reserve Monetary Policy Decision Live coverage. With me, there Valeria Bednarik from Argentina. She's chief analyst in FXStreet, and Yohay Elam, that is he's broadcasting right now from Barcelona. He's chief editor in ForexCrunch. Welcome, guys. How are you?
Hi, Mauricio. I'm doing well. Hi.
So now nobody's expecting a hike today. So what we can expect today, Yohay?
Well, markets will be looking for hints about June. June is the big meeting with new forecasts and a press conference. And currently, markets are pricing in a rate hike for June, about 67–70%. I think it's a bit over the top, and maybe the Fed will cool down these expectations because the economy hasn't been doing so well. So we have only a statement today, and we'll look for hints for June.
Thank you, Yohay. And in terms of market, what we can expect today, Valeria?
Well, I was also thinking that the Fed could give some further hints about their balance sheet. They have started talking about the possibility of reducing it. So maybe the focus turns there. So that's another point to consider, adding to what Yohay has just said. And I do believe the market is expecting somehow little disappointing statement today, not really a hawkish stance, because as Yohay said, data in the US have been pretty soft lately, really nothing compared to what we see by the end of 2016, right? So chances of a rate hike for June seems, yes, a bit too much. I guess the market is losing the hopes that the Fed will have 3 rate hikes this year. And if we don't get a hint for June, that will mean that we will probably get 1 more rate hike this year, maybe September, maybe December. But anyway, that will be a hit for the greenback, you know. And the other thing that may prevent the market from moving much, besides the fact that we don't have a press conference today, is the French presidential debate, the televised debate that Macron and Le Pen will have later today, early Asia, right? So maybe the euro reaction will come after that, not before, not after the Fed.
Thank you, Valeria. Yeah, interesting that you take that point on French election. Yohay, I know that you got your show today, your Forex Open, European Open Market. Where are people wondering? What are the concerns of people? What you can see in your what are the questions they are asking about, you know, about the Federal Reserve, but also about French election? What are the most?
Well, the French elections after the first round came out exactly as expected, exactly as the poll said, with Macron on top, Le Pen second. Le Pen didn't come out first. Markets are a bit more calm. People are asking a bit less about the French elections. There's maybe a sense of complacency also among voters. So we had 2 opinion polls today that both showed exactly 60% Macron, 40% Le Pen. No undecideds, and of course, some people are undecided. I think the gap will be much smaller. I would look to see that if after today's presidential debate, televised one, as Valeria mentioned, if we see some kind of move in the polls towards Le Pen and in tomorrow's polls and Friday's polls, Friday's the last day of polling. So if we see, let's say, a movement towards 55%, that would be very, very worrying. If it stays around 60 for Macron, I believe he has a very good chance of winning. It will not be probably 60%, but you know, you just need 52-48 like Brexit or a very small margin to win. So in any case, the risk is very, very now even more asymmetric than before the first round. If Macron wins, the euro has just a bit of room to the upside. If Le Pen wins, it's a total surprise, a total crash, even bigger than in the first round.
Indeed, I agree with you on that. I was also thinking that despite, of course, the presidential debate is taking a lot of the attention, the fact is that we can say that Macron victory is pretty much priced in right? That's what we saw with the euro gapping higher and jumping over 200 pips from its previous close on the last week beginning, right? So it's pretty much priced in, but yeah, we can't ignore the fact that the debate is taking place and that it could move the euro today, right? Another thing that I would like to have your opinion of, Yohay, I was thinking today, I know the Brexit talks have not yet started, officially at least. We know that the latest data this week coming from the UK show that the growth in the United Kingdom has been quite strong at the beginning of this second quarter. We have strong PMI reading yesterday, strong construction PMI reading today, right? But still, I'm paying a lot of attention to headlines about comments from Ms. Theresa May and comments from Jean-Claude Juncker, sorry, I remember Trichet for a second. Anyway, both are shooting their bullets, right? Saying, putting on clearly, they're so strongly opposite visions of how the Brexit will continue, right? And so far, we have not seen that in the price of the pound, right? But I fear it's coming. You know what I mean? What's your take on that?
Yeah, well, I see it through a political perspective. So we have elections in the UK in 5 weeks. And I think all this gossip, or not gossip, reports that the meeting really was very tough between May and Juncker, serves May very well. Her message in the campaign is strong and stable leadership, getting a good deal, standing for Britain's rights. And these news stories certainly help her. And if we also look at a wider perspective, it's just the beginning of the negotiation, so it makes sense that both sides are anchoring their positions, sort of saying all these big words, and eventually they'll find a compromise after the UK elections, and especially after the German elections. I think negotiations will become more serious. For now, I mean, we'll have volatility in the pound more related to the UK elections. Markets do prefer May's conservatives, and more importantly, or equally important is figures about UK economy. Tomorrow is the most important PMI, the services one. I wonder if there's a gap between the soft data and the hard data also in the UK, because in the US we've seen that, and for GDP was quite weak also in the UK, 0.3 quarter over quarter. So I think we could have. I think markets are ignoring the Brexit noise because they know it's not the serious negotiations, at least for now.
At least for now, yeah. Anyway, would you like to share your technical view of the euro?
Yeah, we actually have a question here about the euro dollar, if you don't mind. Go.
Okay.
So what's the question?
Yeah, what's the question, Maurice?
Oh, no, it's about the euro dollar. Yeah, you're just making an affirmative question. You know, if you're going to take the euro dollar, what is your view in the euro dollar technical view or fundamental aspect to take in account?
I see the wider range 108.20 to 109.50, the post-French elections range. And, the Fed will need to make really big news in order for us to break out of this range. What levels do you follow?
Yeah, well, pretty much the same that you're following. 820 has been below post that major gap. 950 is capping. 930 is in fact the 61.8% retracement of a post-US election decline. And so between 930 and 950, there's a big wall. And as you said, I'm not sure if a Fed could be dovish or negative enough to trigger a breakthrough that level. But if it does, I'm, of course, looking for a test of 110 in the euro dollar, right? And if somehow the price moves beyond the 110 level and stabilize above it, and considering that we have payrolls ahead still on Friday, there's a good chance that the pair will continue rallying once this 930, 950 region gets cleared, right? And around 850, where the pair bottomed most of last week, I have my first support, right, followed by that more relevant 820. I don't expect either the Fed to be that hawkish that the price could break below this level today, but well, who knows, right? But I'm not expecting it. But if it happens, then the pair will probably green lower and try to fill the gap towards 730, 7 in these days.
Valeria, I lost you in the last second. Can you repeat the last part of your statement?
Okay, I was saying that I don't expect the Fed to be that hawkish, so the pair can break below 820. But if it does, we're probably going towards 720, 730, and fill the weekly opening gap we have after the French elections.
Okay, thank you. So we can. Okay, let's move to the cable. What is your take on the cable?
You're asking me or Yohay?
Yeah, you.
Oh, okay. Well, you know, the pair has reached or approached to 130, which is the major psychological resistance, and so far has been consolidating below, I guess, as the market waits for fresher clues, right? Right now, I'm not seeing much of a directional strength in here, but overall, the bulls are still in control for me in the pair. As I mentioned last week with the US GDP coverage, the pound is a bit reluctant to ease just on positive dollar news, and we didn't have much of those lately. So overall, I still consider that the risk is towards the upside. Okay. Anyway, we have a high at 29.65. Above it, 130 is next, and I would like to see the pair closing some 40 pips above 130 daily basis to consider that the bullish trend will probably continue, right? On the other hand, short-term talking, 28.80 is the first support, followed by 28.30. Below 28.30, I do believe that the pair is then at risk of correcting lower. Still, these 27.70 lows we had also from last week are the level to beat to confirm a bearish breakout. Okay. Anyway, your view, you're high on pound.
Yeah, I also see some phase of consolidation. We had a big short squeeze on the UK elections. As you said, 129.60, 65 is the higher resistance. And it seems that the pair is sort of scared of the 130 level for now. And yeah, 127.70 more or less over there is the bottom of the range. Currently, we're a bit, higher on the top side. If the Fed acknowledges the weakness of the economy, maybe you can see cable working its way towards 130, a little bit hesitant. But if the Fed decides to wait for the beginning of June to tell us what it really wants to do in June, like they did back in March, telling us only at the very last moment, then yeah, it's going to be hard for cable to move higher.
Okay. And what about the dollar? Okay, no, I was thinking of taking a look at the dollar yen, but we are pretty much on time of the decision, right? A couple of seconds. Remember, guys, we have a bit of delay in here. You will see the news first and us reacting to the reaction, okay? So here we go. Let's see what the market decides to do with the announcement.
Yeah, 10 seconds.
Okay. 1, 2, 3. Go. Okay, dollar spiking modestly higher as an immediate reaction. Still not seeing much of the headline.
Breaking news. Unchanged.
Yeah.
Unchanged, yeah.
Unchanged. Breaking news.
Yeah. Still, take a look at the green bar.
Let's look at the statement.
Looking to the daily lows. Yeah.
No dissenters this time. Everybody was in line. Last time Neil Kashkari voted against the rate hike. Let's see what else. labor market continued to strengthen even as growth in economic activity slowed.
Okay. Mayors changing. Yes. Dollar easing. Just short term.
Yeah. Looking for headlines to see. But if we look at market movements, they didn't tell us too much. Growth slowdown in Q1 likely to be transitory. That means they're quite calm about the information, the economic data so far.
The committee is maintaining its existing policy of reinvesting principal payments from its holdings of agency debt and agency mortgage-backed securities in agency mortgage-backed securities and of rolling over maturity in treasury securities at auction. It anticipates doing so until normalization of the level of the federal funds rate is well underway. Okay, remember all that gossip, market talk, rumors about reducing the balance sheet? that has been erased with this comment, right? If I'm not wrong.
Yeah, taking it easy, taking it slowly.
Yeah.
Maybe they had a discussion about that and we'll learn about it in the meeting minutes, but nothing serious at least.
Yeah. But there were some comments making the rounds on that ahead of this meeting. Okay, quite limited market reaction to the news. The Fed maintained the positive outlook on the economy, but offered not much news. Mayors are trying to find a certain direction after the event, but prices within familiar levels. Sorry, not much of reaction so far, except maybe the Australian dollar, who remains among the weakest today, that surpassed its previous low by a few pips, and it's struggling to enter positive territory. The rest is pretty much flat. Yeah, the OC has been hit hard by commodities, right? Falling prices in commodities, oil.
Yeah,
gold.
iron ore.
Yeah. Yeah, Cooper also fell back from a 3-week high or something like that today. So we're also trying to hold on, but unable to. Anyway, almost non-event the Fed so far, guys. Really disappointing, if you ask me.
Yeah.
What?
Maybe because they don't seem worried about jobs. Maybe they already know the NFP numbers for Friday, and they want. They're not worried. That means the numbers are okay. Well, but really, the statement, I cannot see anything of substance. Market movements in the euro. Okay, you can say, okay, we're waiting for the debate in France, the elections. But dollar yen, oh, at least here we're moving it. No, not so much.
Not that much. We are hoping, but it's moving higher, in fact, but it has not yet surpassed the daily high. And I would really like to see dollar yen breaking through 1260 with strong momentum to call for an upward extension. But there it goes, sticking higher through previous daily high. Stocks are doing pretty fine in the US.
So dollar yen, some 15 pips to the upside.
The stocks are erasing your early losses, pretty much getting into flat daily basis, still in the red, but trimming early losses. It's helping for a bounce.
Okay. So we're seeing some kind of reaction dollar yen, some 20 pips higher. A stronger dollar now also marginally against other currencies. Pound dollar slipping under 129.
Yeah, the fact is that the minutes did not provide much clues on what's next. Maybe that's what leaving investors clueless. But you take a look, the euro is breaking also low, previous daily low by a few pips.
Yeah.
Somehow the dollar seems to be benefiting from this neutral Fed monetary policy meeting.
Yeah, well, given all the weak economic data, especially growth, then and from payrolls, you could well, if there would be a surprise, if they would say something serious, it would be more to the downside, I would say, than to the upside. So it can be seen as a positive surprise that they didn't say anything, because it could have been worse. But again, I don't see hard to read much into the statement.
Yeah, it was not a big one anyway.
So we're seeing in the statement sort of a bit of everything. Business fixed investment firm, the inflation measured 12-month basis has been running close to the objective. And while core prices have declined, they're still okay. Yeah. I guess they will tell us in June.
Yeah. We have to be extremely careful and pay a lot of attention to policymakers, to FOMC members ahead of a FOMC meeting, June 1, I mean, because if they are actually going to pull the trigger, then they will probably anticipate it as they did for the March move, right? So the market can digest it with time and don't trigger any kind of wild moves. I guess the Fed is more concerned about keeping financial market stability than economic stability.
Yeah.
Or the dollar in check, but well, who I am to Fed say. Anyway, still seeing the Aussie as the weakest, followed by the dollar. It's on the Japanese yen, sorry. Both are the weakest currencies of the board. And the euro is easing towards 900, but unless we have a serious break below 820, downward potential will remain limited, right? 850 is now the immediate support for the common currency, right? While the pound seems a bit more weak now, easing back below 29, and it seems that the market is ready to take some profits out of the table in the pound dollar, sorry.
Yeah, now we're seeing the US dollar strengthen a bit more across the board. Again, my theory is only sort of, it could have been worse reaction.
Okay, there's a question here. Says when dollar index is strong, what order do the other currencies have in regards to their weakness? Which one weakest than last week, etc. CAD and the yen and the Aussie. This is a quite tricky question, you know, guys, because there's not one currency that will weak faster than other as a norm. It depends on the currency's self-strength. Lately, for the market's behavior, the pound is the one that weakens the less. And well, as we mentioned earlier, with the Yohay, Aussie, and yen are today the weakest, but the Aussie because of plummeting commodity prices, the dollar termination rising on yields and stocks. So the fact is that there is no norm, no rule for when dollar is stronger, which currency starts easing first, right?
Yeah, it depends on the circumstances. Nothing is fixed.
Exactly. It does not depend. Everything that does not depend only on the dollar. Uh, Self weakness, self macroeconomic conditions are also waiting on the other mayors, and well, that defines how the market moves daily basis, right? There's another question that seems more like a comment. What happened to the euro dollar right now? Market's going crazy. Indeed, the statement was, at least for me, quite neutral. In the Fed offered maintained, sorry, the positive outlook, right? Maybe the market was expecting a bit of more of a dovish comments coming from Yellen, acknowledging somehow the latest soft data. But the Fed said that exactly that soft data, it has been just temporal and not concerned about it, and therefore the dollar is finding some demand after that. But nothing more. I guess the absence of clues on what's next will prevent mayors from moving much more during the coming hour sessions. Sorry, in based on this monetary policy statement, right?
Yeah. Again, I can read this line that says that committee views that slowing growth in the first quarter is likely to be transitory. So that's sort of saying that, yeah, the data is weaker, but we acknowledge it. It's probably temporary. Don't worry, everything will be all right. But again, they're not saying anything, not giving us any hint about June. The current situation warrants gradual increases in interest rates. It's basically copy-paste of the previous statements, so I wouldn't call it hawkish.
Not hawkish, but neither dovish, right?
No, but we are now seeing an extended move here.
Yeah. There we go. Dollar stronger against all of its mayor's rivals. Still 890 for the euro dollar. You know, guys, we have been trading around 900 pretty much since the week started. And as I mentioned earlier, 850 seems to be the immediate support and ahead of 820. And unless we break below this latest, chances of a break of a clear trend will be limited, given that the pair has been range bound for over a week already. Right, the same seems to be going on with the pound, although it seems a bit more soft. But we have room to go down to 2770 there without actually affecting the previous bullish trend. Right, and the yen and the USD are today the weakest, right, and the ones giving up the more. There, the dollar Japanese yen breaking through my 1260 or trying to.
Yeah, so there are seeing movements. I wouldn't call them crazy. I would call them gradual, like the Fed. And yeah, so I mean, the biggest winner here is dollar yen, which is just extending previous gains. So it's reaching a high ground, extending, well, now it's trading at the highest since, well, March 21st, so highest in around 6 weeks. March 20th, maybe.
Yeah. U.S. equities have paired their early recovery, the initial recovery seen after the announcement, holding a few points below their opening levels. Not actually strong yet, not actually weak. 10-year yields are recovering partially from lows. That is what's backing a bit in the dollar to advance. But quite an uneventful Fed event, if you ask me. Guess they keep on waiting until June, right?
Yeah, I think at the end of May we'll have a revision of Q1 GDP, and just before the next Fed meeting is on June 14th, just before they enter their quiet period of about 10 days, 2 weeks, they will maybe give us, provide some hints about raising rates, or just will not say anything special, which will mean no rate hike. I think they will not raise rates in June unless the data really improves. We get high revision of, well, upwards revision of growth, and that the next NFPs are better than the one we've seen in the one for March. In 2 days, we'll have the next NFP.
Yeah, I guess I was thinking that the non-farm payroll report will be a bit less relevant unless it has, it is again a big disappointment like we saw last month because of being released a couple of days after the Fed meeting, I know the March number was extremely weak, but if you take a look at the non-farm payroll report for the past 3 years, almost, you can see that the employment sector has long been not an issue for the Fed. I mean, the Fed is not really basing its decision on whatever the non-farm payroll report can bring, because the unemployment rate is well below Fed's targets, sort of speaking, right? 5.6 is the average, the comfort zone for the Fed, while we are standing at 1 point lower, really a lot below the level. And the economy has been creating average 200,000 jobs per month, right? So one negative reading as we had in March with 98,000 is really not relevant if it's one lone reading, right? If we have another number, another headline reading below 100,000, that would be a bit more concern. But if it does not, then the non-farm payroll report will hardly had an effect over the Federal Reserve, and therefore will be less relevant for the market also. The key here is inflation, which remains weak, or it's barely reaching the ideal levels, right? And that's the key. Higher inflation is what the Fed actually needs to pull the trigger.
Yeah. These are the mandates: employment and inflation. So, meanwhile, dollar yen is falling back, 112.52.
Yes, cleared with 1260, but unable to clearly break above it. And the euro is also pulling back at 11900.
Yeah. Last week on Thursday, we covered the ECB. We were talking about the levels, euro dollar, and we're about at the same place, no? Pair hasn't moved too much.
Yeah. Yeah, treasury yields are leading or backing a bit the advance in dollar Japanese yen, but practice that even the advance in yields is quite shallow, and therefore that's why the market needs to move stronger or react strongly to the news.
Yeah, I'm looking here at the probabilities for a June rate hike.
Yeah.
So it went up just a bit from, it was a total of 70%, and now it's a total of 73, almost 73%. So the odds for a rate hike in June are a bit higher. But again, a bit. That's why we're seeing the dollar rise a bit, not something crazy.
What if the Fed does not move rates in June? What if?
Well, I think there's the Fed is data dependent as always. I think it took an opportunity in March when the stock market was looking good, was a good vibes in the market to bring forward one rate hike from later in the year to March. But I think in June they'll take a break, especially if the data continues as it is. We'll need an improvement to see a hike.
I'm thinking that if the Fed does not hike in June, we will have much more fun.
Yeah, I'm all in for fun. Yeah.
Yeah, indeed. But that, as you said, that will mean that we will only have one more rate hike, either in September or December. I don't see the central bank rising rates in September and December. It's something too wild, even for the Fed. So the market will move against the greenback.
Yeah. In June, in any case, they'll release new forecasts, a new dot plot, and let's see if it'll be another thing to watch if they'll still tell us 3 rate hikes or maybe more. If they're in rates, it makes sense to keep it at 3. If they don't, yeah, as you said, there's a good chance that they'll have only one more in September or December.
Okay. Okay, there's not much more to say.
Look at the charts again. Say,
yeah,
dollar a bit stronger, not so much.
Yes, that the market will now wait for the presidential debate in France, but still, not big market move.
The debate begins now.
No?
Or began at 8. Began at 8. So
8
you can,
right, in a couple of hours. I'm
no,
sorry.
8 local time, 8 where I am in Barcelona and in Paris. So it's anyway. If you can go to let's see if I can put it now.
Okay, sorry, I was confused about the timing. Sorry.
So if I understand correctly, you can watch it at France 24. Should be with translation.
Yeah. Anyway, I was reading that it will take over 2 hours, right? So, yeah, not something that I'm eager to hear. I will come back in 3 hours and see market take my conclusion and read some news.
Oh, they're not broadcasting it even. Okay.
No, we are seeing something about sports. Seems like.
Yeah. So, yeah, but the headline says live. Okay. Next time.
Okay.
Anyway.
Okay. Do you think we could wrap up this live coverage?
Sure.
Okay. You go first this time.
Okay, so the Federal Reserve left rates unchanged as widely expected. We all knew that. It's not a live, sorry, for them it's live, but not for us. No press conference, no new forecasts, no new dot plot. The upside in the statement is that they see the slowdown in Q1 as transitory. So basically they acknowledge that the data hasn't been so strong of late. Inflation, jobs, and growth were a bit poor, but they see it as transitory, temporary, and they gave us absolutely no hint about June. So we did see the dollar move just a bit to the upside, a very slow, a very gradual move, nothing crazy, no shocker. I guess we'll see a few more reactions to the Fed once we have more analysis, maybe in the Tokyo session, maybe tomorrow morning, but unfortunately, I must admit that it was mostly a non-event. On to the NFP, and over to you.
Okay, I have to add that I guess the market was going into this meeting, waiting for a bit of a dovishness coming from Milan, and we didn't get that. In fact, as you said, they said the first quarter weakness was transitory. The statement, what we can get from the statement, was generally positive about the recovery in the United States, but also, as you said, no hints on what's next. So here we are with the dollar regaining some ground, but a little with little strength or little chances to extend its advance, right? The weakest currencies are, as we mentioned, the yen and the Aussie, and that's not because of dollar strength, but because of still weakness of the currencies, right? So I guess going with those during the upcoming hours will be probably the most interest rate we have across the board, right?
Yeah.
Not sure what the calendar has to offer during the upcoming Asian session, but pretty much okay. Australian trade balance, some data coming from China. Remember, guys, that Chinese data affects the OC. If we have a weak service PMI in China, that will probably exacerbate OC decline. And okay, Reserve Bank of Australia Governor Lowe will offer a speech. So I guess Chinese data is the most relevant one when it comes to trading the OC tonight.
Yeah, we had the Chinese PMIs earlier this week. The Caixin manufacturing PMI came out weaker than expected, showed slower growth in China. And I think this is one of the reasons that we're seeing the Australian dollar under pressure.
Yeah, indeed. Anyway, thank you guys for being here. Thank you, Yohay, for sharing your time with us, and Mauricio for being there in the background. See you back soon. Okay, guys? Thanks. Thanks. See you. Bye-bye.
Thank you. Bye-bye.